Okay, so if you're an old student that joined, just please ask your questions in the private group, so that the new students have the opportunity to take advantage of the floor. Okay. All right. So today, you guys aren't going to be learning any of this today. We're going to go over psychology and pretty much like an intro of how to operate with 4D and how to think and what's expected, and just overall psychology in the way we trade, and pretty much
Yeah,
it's
the
about how,
difference between us and smart money, for example, and
right.
stuff like that.
So I want to go over. Let me move this right here. Okay, so what I always tell everyone, when it comes to 4D is it's about quality trades. So, a lot of traders, they're consistently worried about uh, day trading, right? So day trading meaning you take a trade every day, okay? And that you can take a trade every day. There's nothing wrong with it. But what we like to preach is taking quality trades. Okay, so for example, let me adjust this size. For example, we always want to be looking for um, confluence, our timings, and our setups and our direction, right? We need everything to line up so that we have a quality trade, a very high quality trade, because over time, okay, most traders are caught up in how many days or how many trades they're going into, right? So for example, if I have 10 days or 10 trades, I want 10 quality trades. I don't care how long it takes me to get 10 quality trades. It doesn't matter to me about how many days, right? Like if I took a trade every single day and made $500 each day, that, most traders are so focused on how much I'm making every day. And that's not how professional traders think. We think about our quality trades, because in 1 to 10 trades, you can make 30, 40 grand, okay, from a very small amount, from like $200 or less. We have a student right now. He's our top student in the group so far. Well, at least one that publicly, shows his results. The other one, some don't want to show the results, some do. He turned $50 into close to 70 grand. So, and that was in about a month's time. $50. Okay, so let that sink in for a minute. And it's because he takes quality over quantity. It's a lot of quality trades, right? So if you're able, when we send you guys out the how many grand did I say? I said 70. Yeah, fuck is right. Okay, so and it's following a compounding plan. You need to plan these things. It's not something that you just so happen to get lucky or something like that. No, it's a plan that you need to follow. We provide that plan for you guys. We provide one for the indexes and one for Forex. Okay, and then we also have the full margin setups. So full margin is where you literally take the entire account and flip it. So every trade you're risking the entire account, but our win rate is so ridiculously high that it doesn't scare us per se. So, anyways, so when we think about trades in this manner, okay, when I look at this, I don't care about how many days it takes me. If this takes me 2 months to get 10 quality trades, but I know I'm going to make 30, 40 grand off this, then I'll take that anytime. I want quality trades, but these 10 trades can happen in 1, 2, 3 days if they're quality. So I don't look at days like this. I don't look at like how many days is it going to take me to get somewhere. I look at how many trades is it going to take me to get somewhere. Okay. And typically it's going to, like our compounding plan is usually going to have around 30 trades to, our mark's always 100K. So, also most traders are focused on this trade, this trade, this trade, this trade. They're focused so much on the individual trade. Okay. For example, I think a few days ago, we had a sell from here. And then we also had a sell from here, somewhere in here, we had a sell. And the sell didn't work out, right? The sell didn't work out. And instead of cutting their loss, which they should have done, some of the students kept holding. And I was like, why are you guys holding? It's already done. Pattern's gone. And they decided to hold, and they experienced the pain of that. Okay, because they're so focused on this trade has to work. This one right now. This one's gonna make me, a few $1,000s if it works. But it's not about that. It's about understanding how to minimize your risk and increasing your gains and having a very high win rate so that you guys can compound very quickly. A lot of 4D is about compounding your accounts quickly. Okay, we're not here to spend 5 years growing a $5,000 account at 0.25% risk. Okay, that's not what we do here at all. In fact, the way we manage risk is if you have a $5,000 account, most traders are going to obviously risk 0.25 to max 2% risk per trade. Okay. We're risking 15 to 17% per trade. Okay. So there's a catch to this. Yes, we risk a lot higher per trade, a lot higher, more than a lot of people in the industry. But if you do your research and you look at guys who are really killing it in this game, they're risking about the same, 10% onwards of their account, some up to 30% of their account. If you're like a hedge fund trader, and I have friends that are in hedge funds, they don't even use a candlestick chart, by the way, but the way they do it is they go in with as much money as possible. So they like to load the market with as much money as possible and then get their money out of the market as quick as possible. So they're not ever looking for the move. They're looking for a move, mint. Okay. So for example, if we have some sort of pattern like this, they're looking for a movement in a certain area. They're not looking for the entire move. They're getting their money in as much as money as they possibly can, and they're getting money out at a reasonable area, and they're not holding for this entire leg. Now you can, but then you're susceptible to more risk. So you have to understand that the more you're involved with the market, the more you're opening yourself up to risk. And it's about preserving your capital and taking very good trades at great opportunities and times. Okay. So, and that's what we're going to show you. We're going to show you how to get into these trades, what the setups look like, what you need to be looking for, because a lot of trading is just knowing exactly what to look for. And most people, they come into the market, they have no idea what they're looking for. Now they might look at something like an OB or a supply and demand level, and they have no idea, like they're so focused on just this. And then they're so focused on price just coming into here and forming some type of QM pattern. Okay. That's not how we do it. We know exactly what we're looking for and we know exactly how to enter. Okay. So when you're trading, you need to know these things. You need to know what a good quality setup looks like. What does that look like? Not just focusing on a certain or order block with a gap, or looking at liquidity. Like if you're constantly doing that, I guarantee you guys are losing. If you're using smart money concepts, I can guess your win rate right now and tell you, because I've done it. I did that. I even could tell you your win rate. It's about 28%. 20% if you're good with smart money. If you're really good with smart money, maybe 70% win rate, but you're really patient. Okay. All the shit that you guys see on Instagram with guys with like 1 pip SLs constantly, and you just see orders being stacked. Just know that those guys, the biggest guys, those guys on Instagram, those guys hit me up for lessons. Okay. And it's confusing because at times I was, I would look up to them. I'm like, damn, this guy's really good. Like, does he have a mentorship or something? And then come to find out months later, they're hitting me up for coaching. So don't be fooled by all those guys with the 1 pip SLs.
Ping pong traders.
Right. That's not what we're here. I don't give a fuck about tight stop losses. I don't give a fuck about 1 pip SLs. I give a fuck about profitable trades, getting in the market when things are profitable. Okay. And getting my money out. Like this trade. I took this morning. Let's go over tracking. So tracking, we got to, actually I want to cover this again. So at 40, we risk 15 to 17% per trade, but we're not risking $5,000. If we have a $5,000 balance, we can choose to take $100 to $500 of that. Okay, so the way we manage risk is, if this is our capital, we're saving that ammo and not putting it in the markets. Okay, we're only putting $100 to $500 of that into the markets because we are flipping this. So from 100 to 500 bucks, however much you guys want to start with, I'm risking 17% of this. Okay, so this is secured in case I need to reload my ammo to flip, right? And all I need is really 10 quality trades to make a big flip. Okay, and if I can go for longer, I'll go for longer, and I'll cash out. So for example, if I have 1 to 10, I made 30, 40 grand, I'll pull out 15, leave more in, keep flipping until the ultimate target's reached. So let's say make 50 grand, and take everything out, and then start over again. Okay, but I'm not just risking my entire $5,000. Okay, and this comes from a guy that I first learned how to trade options with. His name's Leo from 13 Market Moves. If you guys want to look him up, the guy's known for flipping $4,000 account to 448,000 in 3 days. And he does this constantly, and he does it live, and you can see it live. Like, you'll see him flipping live with options. But he starts with a little bit of a bigger balance, like around 2 to 3 grand. Sometimes he'll start with like 1,000 and flip it to like 30. But he gears his accounts up only when the markets are in good trade conditions. So when he's ready to flip, the market has to be primed. So once the market's primed, they'll put that money in, flip it, pull his money out. You'll never see him put 100K into an account. You'll see him make 100K in that account, but he's always having, a few $1,000s in there when he's ready to trade and ready to flip. And that's the way we do it with 4D, is when we're ready to flip and the market's in great condition, we're taking this and we're just entering the market when the trade setups are quality and when the market conditions are right. When market conditions are right is when the market's moving sideways. Okay, so if we get sideways action on like H4 or H1, that's when we're ready to gear up and get into the market. Okay, so yeah, that's like this right here. It was very tough to trade because we're just constantly moving it with momentum to the upside. So it's not it's not ideal to start flipping in this. This is more like if you have an account that you want to grow slowly, then you can do this. But when you want to grow fast, you need that market to move sideways. Okay. Now we got to talk about tracking. So you definitely need to be tracking every trade. every single trade, we're going to require 100 screenshots. So for all the setups that we teach you guys, it's going to take about 100 screenshots per setup for you to actually see it consistently. So just keep that in mind. There's 7 setups that we have. Out of those 7, you need to be going back into the charts, back testing, screenshotting it, saving it into a folder. And then after that, after you have your 100 screenshots, it's going to take you around 2 months to do that. So after about 2 months, your pattern recognition is going to be insane. You'll just be able to look at a chart, and within 30 seconds, you'll identify a setup. You'll be like, oh, I see this one. I see that one. But it's going to take about 2 months, and don't try to rush through that in a week. Okay. Just take your time with it, learn the patterns, learn the setups. 40 were massively pattern traders. Okay. There's no other reason to trade anything else. Like I don't care about the why. I don't care about like, oh, there was trap traders here, and then the market pushed up, and then it took out everybody at the beginning of the trend anyways, because they were all, I don't care about that shit. I don't look at that.
If it's true or not. You know, we don't know if that's the legit answer to the way the banks trade. That's just guessing. Do they actually trap a trader or not? Is there actually whatever liquidity there, stops there, and stuff like that? We don't know those kind of things. So we focus on the patterns that are more accurate than just guessing where liquidity is.
Right. Oh, and back to this real quick. Like I said, a lot of traders are focused on all of this when it is a collective of trades. Okay. So it's the entire 10 trades of quality. That's why I don't care if I have to take a loss, I'll take a small loss. I'll get out of the trade quickly. I'll be out of that trade because I'm looking for 10 quality trades. And let's say, you know, I win 1, 2, 3, 4, and I'm on my 5th trade and I'm winning. And then on my 6th trade, I took a loss. I go back to trade 5. Okay. So when I go back to trade 5, there's certain metrics that I need to hit. There's certain profit targets, certain pips that I need to hit at this level. If I lose that one, I go back to trade 4, certain targets I need to hit. Once I move from that, I move back up. Okay. Until the 10 trades are met, 10 quality trades. Okay. So it's about the collective of trades. You shouldn't be thinking of trades individually. You shouldn't be thinking this trade's going to make my account. This trade's going to make my account. Like, no, that's not how it works. We got to think of it as a collective. Okay. It's a probability game. And so we don't know. You could lose 1, 2, 3 in a row and then win all the rest. Okay. And we'll go over when it's time to talk about compounding. We'll go over how to do this. Okay. So anyways, yeah, we don't know what's happening with the banks. Okay. Like this is all speculation. We can say, oh, there was stop hunts here, there was stop hunts here, there's stop hunts here. Well, there's stop hunts above and below each candle. Okay, so you never know. You don't know this. Okay, the only thing that the charts can tell you is pattern. Okay, that's the only real thing that you can really grasp onto, unless you guys have very sophisticated technology, which is very, very expensive. We're talking millions of dollars to get this type of data. It's about $50,000 a month to even get a quality data feed. If you're using something like Sierra Charts, like a footprint chart with a bubble map and DOM and level 2 and level 3s, with market profile and TP, like all those things are what institutions actually use. But even then, if you guys, like the institutions, they're not necessarily, so there's a difference between big banks and smaller hedge funds and institutions. Okay, like smaller hedge funds and institutions, they're using those tools, right? Like the very sophisticated charting platforms with very high level packages where they're paying with a very decent data feed, so they can see certain things like pending orders and like real resting liquidity, like they can actually see that. But even then, if let's say there was resting liquidity above this high, if they saw that, and let's say a bank put an advertisement out, basically what an advertisement out is pending order. So they can put a large pending order here saying that they're going to, let's say, short. And then once price gets there, they just delete the pending order. Everybody thinks like, oh, there's a big short order going into this market. They delete that order, which is illegal, but it's Forex. So, you know, you have these offshore companies and whatnot. So, you know, they're unregulated. And, you know, right when this happens, they just take the opposite of the trade and buy. Okay. So that's institutional level stuff. But if we're talking about banks and stuff, they don't even use, they don't use anything like that. They have an order book, and they basically, you know, if some other bank needs, if they have a position in a stock, or they want to, you know, park their money somewhere else based off interest rates, they'll park their money somewhere else. They'll use that and get cheaper money to buy more shares of a stock. So it's a lot more, it's different than technical analysis. Okay. They have private deals. Blackpool's basically, a Blackpool is off market exchange. So you won't even see their orders, and they do this silently. You can Google that. It's called dark pool. But anyways, I don't want to get into all that. We're pattern traders. Okay. So we just trade a pattern. We see a pattern, and a pattern over time has has data, right? So a specific pattern will play out and have a specific result, and one result is going to be higher than the other. Okay. So really, it's very hard to what's the word? I guess explain. I was looking for a better word than explain, but it's very hard to explain what I mean by a pattern. So for example, let's say we have a QM, which is basically a head and shoulders pattern, right? That has specific characteristics. So we have a head and shoulders, which looks like this. And most traders, like, you know, trade the break of the neckline. If you're in smart money, you're trading some type of OB or breaker, or maybe the whole entire leg. Okay, so like that. And then 40, we trade the QM levels. Okay, so there's several ways to look at this pattern. We have certain context that needs to happen here, right? So we obviously need that break of structure versus just trading the break of a neckline. Okay, we need this first break of structure. Okay, and when we have something like this is a pattern. Okay, this is a basic pattern, and the reason why this pattern is so popular in smart money and in retail logic, it's because it works. That's as simple as that. It works. It's a pattern that you can identify on a chart and see play out over and over again. Now, there's certain conditions in the market that make this pattern a more favorable with your directional bias, depending on those certain market conditions. Okay, so depending on those market conditions, we can get a nice edge in the market with a pattern playing out more likely than not in our favor. So just understand that, try to really grasp the idea of patterns, okay? Because it's not about anything else other than this. You can say run on stops here and there, whatever. I don't care. It's a pattern, okay? There's still this pattern. It doesn't matter about the run on stops or the liquidity and whatnot. Okay, so it's just a simple pattern, right? And this is just one of the patterns, okay? But understand that even this is not really a pattern that I trade, which is a like a ascending wedge or whatever it's called. Okay, I don't even know how to really draw it because I don't trade this pattern. But this pattern, it's a pattern, right? It's a pattern that, with direction and understanding where the market, how the market's doing, like if it's a bullish market or bearish market, you'll understand how to trade this pattern because you see the pattern over and over. And your pattern, maybe it's like 3 drives up or something like that, higher high, higher low. And then let's just say this thing like dips below or something, and this comes here. You know, I don't know. I don't trade this pattern. I'm just trying to use this as an example. So if a trader sees this pattern over and over and over again, there's a likelihood that he understands his data, and his data is telling him, hey, this thing is has a more likelihood of going and continuing up than it does going down. And based on that pattern, I know that I need to be buying this. And I know where this pattern becomes not a pattern anymore. Okay. So for example, if it's QM and we were trying to sell this level and it comes like this, is that a pattern anymore? It's not a QM anymore. So why are you going to hold this trade? Just get the fuck out of it. There's no point. It's not a pattern anymore. Okay, we need the pattern to play out. Even if it played out in our favor, it doesn't matter. It's not, we're not addicted to the trade. Okay, we're not here to just be right. We're here to trade our patterns, get in the market, get out of the market, and then wait for the next pattern to set up and form. Okay. I want to talk about predicting versus possibilities. Okay, so let me remove some of this stuff. Okay, so predicting versus possibilities is so a lot of traders. Let's say there's an OB here, which there is, and price comes down to it. They'll draw something like this, and then maybe they'll be like, oh, there's like a breaker in the future that's possibly going to be formed, and then maybe it's going to come back and touch this OB, and then we're going to come up here, and then it's going to wipe out liquidity, and then come back down to this OB, and then it's going to come back up, right? And they have this whole future pattern that they're, or not even pattern, but price action laid out that they have no idea, right? Like you don't know how the market's going to move. You have no clue. Okay, you have no clue how this is going to play out at all. So when you're doing this and you're trying to like forecast the market movements like this is idiotic. Okay, there's no point to be doing this. I see traders do this all the time, and it's like you don't know what the market's going to do next. And if you do get it right, like you know, ups to you, but you're not going to do that long term, and you need to stop doing that. What you need to be doing is understanding if a pattern is forming, right? Let's say there is a pattern forming, right? That what are the next probable trades that will play out? Okay, I'm not looking towards the future like that. I'm looking at what are my probabilities of my next move playing out. Okay, so if I have something, you know, I don't know, something like this or something playing out, I need to understand oops, where did that go? I need to understand why this probability, why this one, or maybe it's not going to do that. Maybe it'll just be a simple break and retest. Okay, or maybe it'll just not do any of that, right? Maybe there's something to the left, but I need to understand what are my probable my outcomes are. Okay, so that doesn't mean I'm predicting the future. It just means what is most likely going to happen next and which way. Because based on the current setup, so for example, if we have one of our current models, let's say it's our SNR1. So if we have an SNR1 setup, there's only a few possible outcomes that will happen from that setup. Okay, and I need to understand what those setups are. That way I know the probabilities of, okay, now it's forming this setup that I was looking for. I understand how to enter this trade now, instead of drawing out all this future conditions that hasn't happened yet. You don't know, you're making moves up in your head. With us, it's more so there's only a few moves that can happen from a certain move. Does that make sense? Because they have to connect to each other. Okay. This coming week, so after today, on Monday, because I don't do anything during the weekends. I don't teach during the weekends. It's always going to be during the week. During Monday, same time, we're going to go over basically the 4D schematics. So schematics aren't Wyckoff, so we're not using any Wyckoff with this. Wyckoff is also, you know, it's a pattern. Okay, so that's why it works, but it has a lot of context to that pattern. So it's up for interpretation, right? So you can see Wyckoff a different way than I can see Wyckoff. With schematics, we don't do that. This is the schematic. Okay, you see it, everybody else should see the same thing. Okay, with Wyckoff, how many of you guys trade Wyckoff here? or have traded Wyckoff? Just answer in the text box.
I guess nobody. Nobody
Okay.
trades like. The thing is trying to make it not complicated, simple. You don't want to complicate your own trading. You don't want to think twice, three, four, 5 times before taking a trade. You will freeze and you will not take a trade. Wyckoff is just complicating stuff. You don't need it. Smart money is complicating stuff. You don't need it. If we keep it simple, stupid, we are over here to make money, not to be some Instagram liquidity chasers or whatever.
Right, exactly. So, yeah, I mean, Wyckoff, I traded Wyckoff for like a year with Smart Money Concepts and ICT, all that stuff. I've done it multiple times. If you've been following me for any sort of length of time, you know that's where I started with all that. And I pretty much canned all those ideas because though I was slightly profitable, it wasn't anything that was like substantial, and everything took a very long time. Um, and then I started scalping a lot, which was my most profitable venture was scalping at that point in time. Scalping using just M1 OBs and, I could go down to seconds charts and whatnot. And scalping, like I was doing pretty well with, but I didn't have like I was trying to do this on prop accounts, right? And prop accounts are very unfair if you don't know how to manage it properly. So prop accounts are going to force you to pretty much risk really small unless you have like the balls to really hold a trade very, very like a big trade with a big lot size. It's going to be tough to make anything substantial. In fact, I think somebody came out with like a statistics, like a certain prop firm came out with their statistics saying that like only 3% of their traders actually ever get paid out. And that's 3% of people that actually pass the entire challenge. And the most they're making is around 10K a month. Okay. And that's 3% of them. Okay. So very few, I would say less than 1% of them make anything over 50 grand a month. Actually, one of our students, who he's a scalper, he makes around like 40 grand per day. So, but that's on a prop firm, and that's not every single day. Like I said, it's looking for quality setups. But yeah, he does around 40K a day, sometimes more. He's made it to the FTMO, the leaderboard, and he takes ridiculously huge lot sizes, and he just has, he has the balls to hold through it. So, and he manages risk well, and he also, he has a very high win rate. It's around 90%. Okay, and that's just scalping. And scalping, it was really profitable. You're using very big lot sizes, and you're going with the market direction, but you're looking for small moves. You're looking for a move, not a move. You're not looking for the move. You're looking for the movement. So, just a tiny move, and you're up a few $1,000s, and you're doing that consistently through the day. But for me, depending on your trading style, he only trades. No, he trades indexes. Sorry, he only trades indexes. For me, depending on your style, M1 to dailies to weekly charts. If you're a scalper, intraday trader, swing trader, just understand that it's possible to be trading on M1s. It's absolutely possible. But if you're trading on M1s, you have to understand what the other timeframes are doing. Like, you can't just go in and trade M1 like that and not understand what higher timeframes are doing. You have to be aware of everything going on. So the lower the timeframes you go, the more awareness you need. So if you're too scatterbrained, it's going to be very tough for you to get in there. And if you're not patient, Okay, if you're not patient with M1s, it's going to be very, very hard for you. Okay, because price can come down to, let's say, a level down here on an M1 chart, and miss it by a tick. And you're just going to have to not chase that. And it's going to be very frustrating because you've been sitting there all day, all morning on M1 charts, looking at every single tick, and then price never got there. Now, yeah, you can set an alert, but you're still waiting. Theoretically, you're still waiting. And if you're addicted to the charts where you can't get off charts, then scalping is going to destroy you. Okay, you have to be able to know when to scalp, when to trade, the timings, when manipulation is going to happen, when you're going to most likely get taken out of the markets, before you can really scalp successfully. Okay. What else do I want to talk about? And also, when it comes to those 100 screenshots, because I know somebody asked in there, they said 100 screenshots of 7 setups, not each setups. 100 screenshots of each setup, and there's 7 of them. Okay, so it's about 700 screenshots. Okay, because you need to be able to recognize the pattern. At first, it's going to take you, you're not going to see it. Like, I can tell you that. Like, at first, you may see 1 or 2 of the patterns, but it's going to take you some time to actually identify the pattern. Okay, you need that. You need that pattern recognition skill, and over time you'll get really good with the pattern recognition, and you'll be able to see the trades over and over again. Okay, so you really need to track things. So once you've back tested, you got your 100 screenshots, then it's forward testing. Okay, forward testing is going to be around 25 screenshots per setup on the forward test. And what we do is we're going to track each one of those. So you're going to take a screenshot of before the setup and then after the setup. And then if it was successful, you're going to mark which setup that was. Then out of those 7 setups, you're going to understand which setups you do best with. So once you identify, like, okay, cool, on this particular model, I'm getting, a pretty decent win rate here. I understand that it's my best model, and I can set up an account where I only trade this pattern, and that's it. I don't trade any other pattern. I just trade this one. Okay, because you understand that setup is your highest probability one. And that way, when you get to those 1 to 10 trades based on the compounding plan, it's very easy for you to do it, because you were patient enough, you understand the setup, you understand that that's your highest probability one. So getting through those 10 trades, 10 to 30 trades, it's going to be it's going to be a breeze for you, because you understand this is the only setup I'm taking. So there's no reason for me to be trading unless that setup is present in the market. Okay. Let's see, there's a new message. Means most likely will only specialize on one of these patterns. No, you can, I'm good with all the patterns. It's just I have patterns that I'm better with. Okay, so depending on how your understanding of that pattern is, and the market you're playing. For me, I just play gold in indexes. For you, you may be playing GBP JPY or GBP USD or EU. So whatever pattern that you're tracking on that particular pair that you want to be good with, you're going to get different results than I will. Okay, so for me personally, I'm good with all my patterns. It's just I have patterns that I use and account for that I only use that pattern on. Okay, because I know that pattern. I understand that it's very prevalent in this particular market, and I'm just going to trade that pattern. But if I'm stacking entries, so if I'm playing about through this whole thing and I have a really good entry from the lows, like I can stack entries in. Okay, and those will come from different patterns. Okay, which indices do I trade? I just trade NAS. That's the only index I trade. I don't trade US30. I don't trade SPX. I just trade NASDAQ, and I trade gold. Okay. I'm going to open up the floor for questions. So if you guys have questions, you can ask them now. Either in the chat or if you want to be on the call or whatever.
Hi.
Hey,
Hey, just a quick question, really. So I've been learning ICT for maybe like sort of 8 months or maybe up to a year or so. Just wondering if we using your strategy, can we blend it with the sort of breaker fair value gaps imbalances?
yeah,
Um,
I mean, there's no reason you can't blend it. We blend some of his concepts, not a
yeah,
lot. Mostly, the only thing we really blend with ICT is something that there's two things. One, three things. Three is a weekly cycle. Okay, a weekly cycle is a thing. Okay, and then kill zones. Okay, but our kill zones we interpret them a little different than he does. And then order blocks, we don't really use order blocks, but we do use something called a power block, which you guys will learn later. It's more confluence to an OB than just selecting an OB and then waiting for mitigation and all that. Okay.
okay,
But we don't really, yeah, we don't really use ICT stuff. We don't really use any smart money stuff because it's just at the end of the day, if we look at a breaker, what is a breaker? It's this, right? Okay, let me change this. Okay, this is a breaker, right? Price is just retesting here. This is just a break and retest with a fancy name, a breaker. When we look at an OB, what is an OB? Okay, what do we expect price to do when an OB is formed? Is we're expecting it to come back down here. Okay, what is that? That's just a breaker, right? Like on a lower time frame, this is just a breaker. So for us, yeah, it's an order block, but it's just a breaker. It's just it's just a break and or sorry, not a break and it's a break and retest. Price breaks the high, comes back down and retests. Okay, so when you're looking at ICT concepts, like just understand that a lot of it is basic shit. Okay, it just has a fancy name, and you can argue that point. It doesn't matter. Like as long as you understand something, then I have no problem with it. And if ICT is something that you understand and you want to blend, then go ahead. But for me, like I don't get caught up. I don't get caught up in all that noise with why the reasonings and all that shit. For me, it's just patterns, and that's how I trade.
thank you.
Yep, no worries. Anybody else?
You guys understand the compounding plan, the risks, and you understand that? We're not risking small, you know that, right?
Specific pairs we choose.
Stick to gold.
Yeah. You can trade any pair. I just stick to gold. Gold really gives a lot of setups. Will there ever be a refresher? Once I send you guys the link to the private group after today's session, and you guys can join that, you'll see the group's highly active. Okay, so we're constantly talking about trades, just all day. It doesn't stop. Okay, and we need people to participate. People who participate get certain gifts. Just know that. So they get little Easter eggs. If you're highly active in the community, you get little Easter eggs. Why only take 500 trades but not the whole 5,000? Because if I'm putting $5,000 into the entire account, I'm going to risk 17% of that. And I'm not going to put all my money into that market. I want to start with a small amount so that, for example, if I'm growing a $100 account and I'm up 20K, right? If I blow that 20K, because the way we trade is going to scare the shit out of you. And unless you're able to really stomach, you know, risking 20K on one trade, you know, it's going to be very hard for you to do that. So exactly. So the risk is only $100. You know, if I'm risking an entire 20K on a trade, I'm really only losing $100. You know, because you can lose in trading. It's not like there's nobody in the world that doesn't take a loss in trading. So I want to have that ammo to refill my account. If I take my whole 5,000, put it in there, and blow the whole thing, then where's my ammo? I'm gonna have to go and get more money out. Instead, I have what I'm willing to risk. It's a bankroll, right? Even it comes from poker as well. Like if anybody plays poker, you have a bankroll, and you only play with a certain amount of your bankroll. You keep the rest of that in your pocket, and you play the game with your bankroll. Depending on the risk management plan that we're going into. So we have two types of compounding plans. One compounding is staple compounding, where you have to meet certain targets and you go down the trading checklist. The other one is going full margin, which is where we're trying to flip an account extremely quickly. So
if you see as posts, you see how he enters multiple times on the same level. You just basically click until you can no more.
right. So there's the reason why there's one compounding plan and another compounding plan. So the full margin one is being able to get into the market, flip the account, and get out. When we're doing 17%, we're able to not 17% per trade, right? So when we're doing that, we're able to stack positions as well. So let's say, you know, price moves up and another setup forms, we still have capital left to enter more trades. When we're doing full margin, you're going full margin on one trade, so you're not going to be able to stack positions. You're not going to be able to do that. And what I mean by stack is so there's difference between stacking and layering. So layering a position is you know, taking very small lot sizes and utilizing the leverage and getting in, you know, in a layered position. So you're layering small lots into here. Stacking is where you have your position here, and then another setup forms. You have a position here, another setup forms, and you have a position here. And now you're in 3 different setups, you know, and then you have, let's say, a hedge up here. So you have the ability to hedge your bets up here.
The reason why we do that, because win rate is higher than the normal smart money or whatever. See, that's why we are able to over leverage it, because we know it will probably work. 8 trades out of 10 work, 9 trades out of 10 work, 4 out of 4 this week worked. It's a bigger win rate than the normal small money. Okay. With a low win rate like 50 or below, of course you're gonna risk 0.5, 1%, maybe to 0.25 and stuff like that. But if you know your trades are 9 out of 10 times successful, of course you can most definitely go with over leveraging that one trade. Yeah.
Yeah.
It's a different logic. We compound. We're flipping small accounts all the time instead of, I don't know, whatever they do these days.
Now, like when we go over the compounding plan, you're going to see a lot clearer picture of why. But it doesn't mean that you can't, like, if you want to start with $5,000, like, you can. There's nothing saying you can't. If you have more ammo in the bank, like if you have, you know, I don't know, 100K in the bank or some shit like that, or more. If you have that and you want to start with 5,000, me personally, I don't see a need to. I can start with a very small amount. If you know, having $1 million in the bank, I still wouldn't. Having 2 million in the bank, I would not start with a $5,000 balance. I'm still going to start with a very small amount. Asymmetric. I've never heard of asymmetric compounding, but if you want to explain it. Um, we can apply these
Yeah,
concepts.
I use swing trades with these concepts. I mostly
Yeah,
focus on H4 daily and stuff like that. H4, H1, but H4 mostly and daily. So I
yeah.
use it. Yeah.
Ivan's more of a
You can create different account. I got Fivers, I got 2 swing accounts, and I got small flipping accounts. You can play around with it, whatever you want to do, but the focus is flipping. And swing accounts I hold. When it comes to swings, I hold it. I hold it for a long time.
shall we care about the news when we trade? Yeah, you should. But you should understand that when you are trading the news, that you're going to open to yourself up to a lot of risk. But you know, I trade the news. I don't really. If I see my pattern and the news is there, then it's just most likely going to catapult my trade to just really high levels. Can you guys cover a little bit on daily mindset when preparing to go into the markets? So I literally, when it comes to my trades, I look for my pattern, right? I look for the setup and I just take it. I don't have anything in my mind that tells me to be scared of the trade. I don't trade with an SL, right? So I cut loss. I don't trade with an SL. I used to trade with an SL. I used to use a hard stop. Now I just know when, like, over time, you're going to understand, uh, you're just going to see how so like 99% of trading can be taught. There's 1% of it that you're going to have to use your own discretion. You're going to have to understand, because it's going to be something that you have gathered in your own awareness. Like you've seen it so many times. For example, an example of that is people that get into a level like this to try to sell it, right? They see like some demand, supply level, and they get inside of it, and they take, you know, some type of QM pattern on a M1. See, for me, I just know from trading for so long now that this is going to get tapped out more than likely. Like this is going to get destroyed, right? You're going to get something above it before a sell happens. And that's just something that will grow in your awareness. And you know that, okay, most likely this high, even though I caught, let's say, the top of it, I caught the very last pip, like you're most likely going to be taken out. So if you are trading that way, you should be getting in and out of this market. Okay. My mindset when I'm coming in, I'm literally just, I'm relaxed. I understand my setup. I understand my timings. I understand when I want to get in. I understand when I'm defeated. That's like a big thing. Is you have to understand when you're done. Like when you're done is like, how many trades can you suffer through? How much more pain are you willing to go through before you blow your account? Instead, you can come back another day when market conditions are a lot better and you're seeing things clearly. Your mind, as far as getting into trades, is going to be very skewed when you're taking losses after losses, okay? Because at that point, you're going to be forcing setups. You're going to be seeing things that are not there, okay? And it's going to really take a toll on you. You're going to enter so many trades, and you know you're not supposed to. And the thing is, when a lot of traders fail is because it's because they have no discipline, right? So it's going to be like a reflection of your own hardships in your own life. Like regardless of trading, it's going to be something that's going to show you your true self, as far as your discipline, and your impulsiveness. You know, somebody who, no, I'm not going through any trades today. Today is just a psychology trade session. All that everything that you guys want to learn is going to be gone over Monday and Tuesday. Okay. That we have to chunk this. We can't rush through this process. There's a whole entire process we need to go through. Is there a specific time to trade, like only NY or London session. Yes, there's absolutely a specific time to trade.
We'll
Yeah,
shut it
yeah.
down on Monday. We'll talk about that on Monday.
Would you recommend trading 2 to 3 trade up setups and no more than if scalping? Wait, hold on. Would you recommend trading 2 to 3 trade setups and no more than that if scalping?
I mean, guys, it comes down to you. You as individual, what kind of setup you want to trade. Me personally, when I do flipping, I only trade one setup, only one. I only focus on one. It will come down to you when you back test it, when you forward test it, when you study it. You will see which setup are you most comfortable to take it as 20% or higher risk.
Mhm.
I mean,
And-
on
yeah,
swing account, I personally trade all setups, but when it comes to flipping, it's only one, the one that I'm most successful with.
also, like there's going to be somebody in this group that's going to try to, and it's fine because it's not like a bad thing, but it's where you're going to try to force every setup. Somebody here is going to ask that question, and I already know it because I've done this boot camp now 3 times. Is when the setup is not there, and then you're going to ask me, what do I do when the setup's not there? Okay, you do nothing. You don't trade it. We only trade the obvious. Trade the obvious. If it's not there and you have a tough time seeing something, don't try to force it just to get into a trade. It's just showing you to yourself that you have this itchiness to get into a trade. You're trying to get into this market, whether it be personal financial reasons, whether it be an ego thing where you want to constantly be in a trade and constantly winning. I don't know everybody's issue here at all. But we all have some type of internal battles that we need to figure out. Okay. And trading is going to show you a lot of that. It's going to show you how disciplined you are, how patient you are, how impulsive you are, how non-impulsive you are, how much you overthink things. Okay. We track emotions. So when we get into tracking things, you also need to be tracking your emotions through each trade. So every trade you take, did you take it on an impulse or did you take it because you overthought it? And based on those two things, you can find out, damn, all my impulsive decisions are actually correct. So once I see the setup, I just take it. That's when I really should take a trade. And anytime I overthink things is when I lose a trade. Or it might be the opposite for you, where your impulsiveness gets you into losing trades, where your overthinking actually gets you into winning trades. Trader Sync and spreadsheets. So depending which you like, I personally use Trader Sync. And for my screenshots, I just use a spreadsheet.
You can guys even use Telegram journaling if you want,
Yeah.
if you find it cleaner.
Yep. Yep. Would you recommend 2 to 3 setups? Oh yeah, Ivan already went through that. I went through a sample trade, say flip. Now that'll be gone over the next session. I mean, this was a trade I took, so this is a flip trade. Okay. About 70 pips, roughly. Closed out because we have a level here. So no, I took it out. I took it out because there is a level here. I'm not going to go over why here today, but you guys will know why. When backtesting, do you think it's best to take a screenshot of all time frames before and after and then write about why I took it based on the pattern? Okay, so a lot of you are going to be, there's going to be a lot of questions right now, which will be answered later. But based on that question, you will screenshot the higher time frame, but we use higher time. So smart money, you have backwards shit, right? You have higher time frame with lower time frame confirmation. We use lower time frame with higher time frame confirmation. So we use the higher time frame to confirm our trades. So the only time we use lower time frame confirmation is if an SL is way too big, like where it's just it's an absurd SL where if we're going to be incorrect about that pattern, it's going to be incorrect by a lot, and we should only be incorrect by a little. Okay. So we'll screenshot our confirmations on the higher time frame to pair it so that you guys understand how this works. Okay, so what I'm going to do right now, because I have a private coaching call in about 20 minutes. What I'm going to do is I'm going to send everybody the private group chat. Try your best not to go through everything, okay? Because it's going to confuse the shit out of you, and you will learn everything that's in that chat, okay? So you guys will learn that. Yes, next class is on Monday. So please, hold on one second, guys. So please, when you guys have access to that group, don't ask questions yet. Ask questions about psychology, but don't like go through and ask, like, what pattern is this? Or, you know, what schematic is this? Or like, what are you talking about here? You guys will learn all that, promise you. And then after the boot camp's over, then you can ask all the questions you want, but please clear your minds. Try not to overindulge in anything in the group, and just chill, and then you'll eventually learn everything that you need to know, and then all the questions that come about, you'll be able to you know, get those answered. One question here: for my understanding, asymmetric comment is when you risk a certain amount in your first trade, like 2%, then you win it, and then something like 4% RR. Then the next trade, no, we don't do anything like that.
We have a compounding plan. It's in the group. Yeah, we don't do that.
Yeah, we don't do that. It's a lot simpler than that.
You can do it, but
Yeah. Just once you master the setups, like whatever you want to do, you can do. You can take it and apply your own compounding plan. But for us, you know, we'll give you guys the compounding plans that work for us. It's going to be the same timing. So same Monday, 5:30 a.m. PST, and then Tuesday.
Yeah.
Okay. The reason 5:30 a.m. works is because this is the time that most of the entire world is up at the same time. All right, any last questions?
I guess not.
All right, guys. Well, welcome to 4D. I'm gonna send you guys in the lobby. I'm gonna send you guys the link. So, all right, guys. Have a good one.
No. See you Monday, guys.